Hello everyone. This is the pre-market report video for today, 18th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. We know last Friday, Nifty closed over 250 points positive, and that positivity was mainly driven by IT stocks as the whole sector itself increased near 5% in one single day. On Thursday, it increased 3.5%, and on top of that, again on Friday, it added another 4.5%. So, from Wednesday closing, it increased 8.13%. There are three reasons for that. One, we know and we discussed in detail about Fed Chairman Dovey's speech and possibility of 3 interest rate cut in 2024. Then second, even discussed on Friday pre-market, after multiple months of above 4.5% and near 5%, finally on last Thursday night, 10-year bond yield dropped to below 4% and moved around 3.92%. Thus, in US market itself on Thursday night, Infosys increased over 5%. Third, on Friday, there was FTSE All World Index rebalancing. We know MSCI index. Similar to that, FTSE All World Index is also big enough to influence the market. That's why if you see the trade volume, FII purchased for near 38,000 crore rupees and they sold for around 28,500 crore rupees. As a net, it's 9,250 crore rupees net bought value in one single day. The reason I'm saying this is because only FTSE know what they did with those 38,000 crore rupees until they release the complete report about which index stock weightage they increase and which decrease, etc. However, I'm guessing they might increase the IT stocks weightage since all IT companies are green, no ESI related issue, and it's cheaper compared to other Indian large cap stocks, so very much of the safe bet. Here, prior to Friday, they only gave the list of stocks they added and list of stocks they deleted. They haven't given any other details. If required, please pause and have a look. These are the stocks they added and deleted from the list. Anyway, as a overall on Friday, FII net bought for 9,240 crore rupees, whereas DII net sold for around 3,080 crore rupees. Other than that, Nestle down near 2% as HSBC downgraded the stock, cited its higher valuations. Either way, on Friday, Nifty closed super positive and it managed to increase continuously for the 7th consecutive week, and this is the longest weekly gain in the last 6 years. Just for info, last time 8 consecutive week positive run happened only in January 2018. Then coming to US market, it opened slightly in the negative momentum due to the profit booking. In addition, New York Fed President John Williams gave the interview with CNBC, which added some worry as he said it's too early to speak about a rate cut and in turn made the US market more negative. Again, additionally, S&P Global released the PMI data for US for the December month. Here, manufacturing PMI fell more than expected in December, but very important, US service sector, which is directly related to consumer inflation, increased 51.3, which is more than expected and also 0.5 higher compared to November month. Despite all these negativity, US market managed to close flat to positive. Dow Jones increased marginally by 0.15%, whereas S&P 500 closed near absolute flat, negative 0.01%, and Nasdaq was up by 0.35%. In case of VIX, oil and 10-year bond yield, all roughly same as Thursday closing. VIX still around 12.5, about oil, Brent crude closed near $77 per barrel and WTI closed near $72 per barrel and 10-year bond yield around 3.92%. So the momentum in US started to show some slowness or consolidation. However, it managed to close on a positive note. Thus, in line with that negative momentum, GIFT Nifty on Saturday morning dropped around 75 points and closed at 21,474. Here, at present, the premium between the Spot Nifty and GIFT Nifty is somewhat not making sense. Hence, I think it's indicating roughly anywhere between 50 to 100 points gap down opening. Coming to Indian ADR in US market, as it is, both the IT stocks closed positive, whereas both banks closed negative. Then, if we calculate the arbitrage, only HDFC Banks looks positive, all others including both IT turns negative. Again, as I said, last Friday was FTSE rejig, so it's difficult to correlate any. Let's give couple of more days so market can balance it. Now let's move to the India related stuff. On Friday at 5:30 p.m. Indian Standard Time, RBI released the bi-weekly bank's loan and deposit growth. Deposit growth increased 13.4% and loan growth increased 20.8%. Here, both the data isn't comparable to previous bi-weekly growth rate, so no drama here. But to be honest, these are really very good numbers. However, on the negative side on Friday, Indian banks subscribed 2.7 times for RBI's VRR auction. Here in comment section, one of the viewers asked how VRR is negative for banks. For everyone benefits, I thought to answer here. Basically, VRR in simple term, it's a very short time loan that RBI gives to the bank to fix their immediately liquidity crunch problem. Like how for emergency, we go and ask money from our friends. Similarly, to fix the liquidity deficit, RBI agreed to give 1 lakh crore rupees, whereas for that, all Indian banks together requested 2.7 lakh crore rupees for exchange. Again, liquidity crunch is not a major problem like NPA etc. but it is also a significant issue, especially it will affect the bank's profitability. Hope it's clear. As a summary, clearly the global momentum was not as positive as it was on last Thursday and Friday morning. Also, GIFT Nifty and Bank's ADR looks negative and indicating the gap down opening of 50 to 100 points. However, IT looks okay and also at present US market opened flat to positive. In addition, no more rejig. There won't be any profit booking or short covering by institution anticipating the rejig. So we can see traders' influence on the stock price. Moving on, yesterday as per stock open interest, Nestle, ICICI Prudential Life Insurance, HDFC Life Insurance, Navin Fluorine, Crompton, Maruti Suzuki got an increase in open interest along with a negative close indicating the short build-up. On the other hand, National Aluminium, Oracle Financial, L&T Tech, HCL, Coal India and Bharat Electronics got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, not much, only this German business index in the afternoon is the only item I think that can influence the market. Coming to technical, Nifty opened a gap up of more than 100 points for the second consecutive day and hit an intraday all-time high of 21,492 and closed 274 points positive. And also, as we discussed on weekly basis, it's the 7th consecutive week positive close. Thus, on both daily and weekly chart, it formed a long green candlestick pattern. In addition, it continued its higher high, higher low formation for 3 weeks in a row and 2 consecutive days in a row. So, on both daily and weekly basis, it has not registered any negative divergence yet, so not sure how long the rally will continue. However, 21,500 seems to be a psychological resistance and the immediate support may be at 21,250 to 21,000, but any correction from here could be a buying opportunity until it breaches 21,000. Then in case of Bank Nifty, it opened a gap up of more than 200 points and moved above 48,000 mark for the first time. Thus, it also formed green candlestick pattern with long lower shadow on the daily chart indicating buying interest at lower levels. So similar to Nifty, we can expect the up move to continue till 49,000 to 49,150 from short term perspective. On the downside, 47,650 is the crucial support. Regarding weekly options, the maximum call option open interest was at 22,000 strike, followed by 21,500 and 22,500, with new call option writing at 22,200 strike, then 21,700 and 21,500. Thus, the weekly options data indicates that 21,500 is expected to be the immediate crucial resistance. Whereas the maximum put option open interest was at 21,300 strike, followed by 21,200, with new put option writing at 21,300 strike, then 21,400 and 21,200 strike. Hence, the immediate support is at 21,300 to 21,200 area. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.